The other thing I would add is that back in 1933, when the US was under the biggest deflationary collapse it's ever experienced, the Great Depression, what was the first thing that President Roosevelt did? Well, he closed the banks and he signed Executive Order 6102 to confiscate Americans' gold. So he didn't go for the currency, for the paper money. He went for gold because it's the ultimate form of liquidity. Monday, June 10th, 2024, Maneco 64, home of alternative economics and contrarian views. There are a lot of analysts out there who think we're about to enter some kind of liquidity crisis, that the whole system could implode, and that in that situation, everyone will want to have dollars. And by dollars, I don't mean gold and silver dollars. I mean the kind that is a debt instrument, the fiat dollar. And that's what I'm going to talk about today. They might be partly right, but in the end, they're going to be completely wrong, in my opinion. Before I do, just like to thank all of you again for your interest in the channel and all the new subscribers. So if you do enjoy my videos and haven't had a chance to subscribe, make sure you do. Make sure you hit the little notification bell as well to be notified of all my new videos. And make sure if you like a particular video to hit the thumbs up and share it. So liquidity. What is liquidity? Well, in a heavily indebted system, when you get asset prices moving up and down sharply, or i.e. we get volatility, and especially to the downside, if we see bond markets dropping and yields rising very sharply, if we see the stock market as well dropping and currencies going all over the shop, right? If you remember well, almost 2 years ago now, the pound plummeted back in September of 2022 to almost 1-to-1. That's volatility. Liquidity really dries up because a lot of speculators, investors, and even people who run your pension funds, they're highly leveraged because for the last 40 years, that's all that people have known. Lower interest rates, more leverage, higher asset prices, and I'm afraid to say we're up to here in debt. And it's not just me saying that. Even the IMF is warning now. Over the weekend, one of the deputies, chief economist there, said IMF warns U.S. on ballooning fiscal burden. Geeta Gopinath urges Washington and other advanced economies to reduce their debt. And she says advanced economies, not emerging market economies or low-income economies. What's her solution? Well, her solution is spending less, government spending less, less deficit spending, trying to get the debt down. The way they look at getting the debt down is not by paying it off. That's the Keynesians hate paying debt off. They just want the economy to grow faster than the debt. It's called financial repression. They want countries to inflate away the debt as well, which is financial repression. But what the IMF doesn't seem to understand is that the system needs the debt. So I'm sorry, Miss Gopinath, whatever her name is, this is not going to happen, and they're going to keep trying to pump the liquidity, especially in time of crises, and that's what central banks are there for. So yes, there might be a liquidity crisis, and we've seen it before, like back in 2008, back in 2020, back in the year 2000, and so on, and in the European sovereign debt crisis. But central banks always come to the rescue with more liquidity. And how do they do that? Well, they just create fake reserves out of thin air to inject liquidity into the banking system. They will do whatever it takes, just like Mario Draghi said back in 2012 when the euro was on the brink of collapsing, right, or dissolving or breaking up. But I will give people who call for this some credit, of course, because who knows, central banks might be overwhelmed, even though I think they can create quadrillions if they like to. But just in case they don't, yes, we could have a liquidity crisis. Could one be starting now? Well, some people are talking about how gold dropped on Friday and how the dollar strengthened. The dollar is around 105 in the dollar index. That's another, how can I say, distraction, because the dollar was at 100 back in 1973 when the dollar index was created. So it's not really that strong. If anything, if you look at the dollar versus the major currencies, and by that I mean the Swiss franc, the Singapore dollar, the Deutschmark, and you can still look at the Deutschmark. The dollar is massively down in the last 50 years, even against the yen longer term. But even if the milkshake people are partly right, I still think all the fake liquidity is going to go down John Exter's inverted pyramid here, as you can see. And what's at the top of the pyramid? Well, derivatives, unfunded government liabilities. So we know what unfunded government liabilities are. Is Social Security, Medicare, everything that the government owes the public. What about derivatives? Well, derivatives are most of the foreign exchange market, which trades as derivatives, because anything that doesn't trade spot is a derivative. It's leveraged. Gold futures are derivatives. Silver futures are derivatives. Yes, people who live by derivatives, who live by leverage, yes, they will be clobbered in a liquidity crisis. And of course, derivatives are not the real thing. They're just bets on gold and whatever, silver, on bonds, on stocks, on interest rates, on other commodities. So yes, there might be a lot of volatility, but then we're going to continue coming down this inverted pyramid. So what's the second level here from the top? Non-monetary commodities, private business, real estate. And then we get down to corporate and municipal bonds, securitized debt, listed stocks. And then we come down to government bonds, treasury bills, and then paper money, which is what a lot of people call cash. And even that is erroneous, in my opinion, because in the old days, cash was specie. And what is specie? Well, it's real gold and silver coinage. Because if you look at a dollar bill or a Bank of England note, it's a promissory note for the stuff that's at the bottom, gold and silver. There's no silver here, but you can add silver to it. Yes, in the liquidity crisis, everyone's trying to sell their assets to pay off debt. And that, of course, is if you have debt. Not everyone wants dollars to pay debts or pounds or euros. I don't have any debt. I don't need any pounds or dollars to pay off my debt. But yes, there might be a rush towards not just the dollar, but physical pounds, euros, Swiss francs. But at the end of the day, the only thing that will survive in complete deflationary collapse are gold and silver, at least in terms of a monetary asset. Everything else will just be annihilated and it will be worthless. and all the trillions and quadrillions, because derivatives are in the quadrillions, that have been created since the top in interest rates back in 1981, they're just going to go, the way of the dodo bird. It's all going to disappear, and people are going to realize that it was all mythical, as President Putin would say, mythical values. And talking about President Putin, he mentioned at the SPIEF conference in St. Petersburg over this past weekend, and it's a huge conference. I think the only people that are not attending are Western leaders, and there are some, I think, Western business people attending, but it's huge. It's got over 130 countries attending from all over the world. And he said that America is the biggest debtor nation, and he's right. He said the U.S. owes $54 trillion and to the world. And I wanted to check here the list of countries with external debt, because the milkshake people and a lot of people argue that emerging market countries will need dollars. Maybe a little bit, but I don't think so. Look at who's the biggest external debt holder in the world. Well, it's the United States here with $34.4 trillion in external debt. Then comes a distant second with $9.65 trillion, the United Kingdom. Interesting, isn't it, that the bullies of the world, the Anglo-American Empire, are also the biggest external debtors in the world. China is at number 8. China doesn't have a shortage of dollars. China has plenty of gold. Some people calculate that they have 32,000 tons of gold. And why would you be worried about liquidity if you have huge hoards of gold? And that's how I see it. Yes, maybe the dollar will look really strong just before the end, but believe me, unless you have debt and you need to pay it off, why hold dollars? I think it's a big distraction, because dollars and all other currencies in the world are fiat, and you can never pay them off. The system can never pay it off because you can't extinguish it. There's nothing to extinguish it, because we're not on a gold standard or on an honest system. The only way to pay it off is to create even more debt. And the most important thing, in my view, is that holding physical gold and silver as a monetary insurance or asset eliminates third-party or counterparty risk. And that's the worst thing in a deflationary liquidity collapse, I would say. My money, though, is, of course, on that central banks and governments, they will do everything to keep the system going, i.e. they will inject liquidity monetarily and fiscally. They're going to fight till the end, and that is going to have the same effect as a deflationary collapse. The other thing I would add is that back in 1933, when the U.S. was under the biggest deflationary collapse it's ever experienced, the Great Depression, what was the first thing that President Roosevelt did? Well, he closed the banks and he signed Executive Order 6102 to confiscate Americans' gold. So he didn't go for the currency, for the paper money. He went for gold because it's the ultimate form of liquidity. It would just be a hyperinflationary collapse where the currencies become worthless versus real money, i.e. gold and silver. And why is it like a deflationary collapse? Well, because the price of everything collapses versus gold and silver. It becomes really affordable. But if you're not holding gold and silver, you're not going to benefit from that. And of course, that's up to you. You could stick to having dollars, you know, fiat dollars or any other I owe you nothings currencies. And I owe you nothings is a term that was used by John Exter, the man who devised that inverted liquidity pyramid. I think he will be right. At the end of the day, whenever, if we have a deflationary collapse or liquidity collapse, gold and silver will survive. Everything else will be gone. But I don't think he realized how desperate and extreme the central bankers and governments would become. He didn't see this coming, all the QE, all the massive deficit spending. Yeah, I think he passed away in 2006, just before the '08 crisis and everything kicked off. So let's quickly look at where the markets are this morning. It's 7:43 a.m. London time. We got spot gold at 22.89, right on the lows, down about $4. The high's been 23.01. Silver's up 29 cents or 1% at 29.45. The low's been 29.11. The high 29.62. So what we're seeing here is derivatives trading in gold. It's not people getting rid of their physical gold and silver, rushing for liquidity. It's speculators rushing for liquidity in the derivatives market. The Dow futures is down 50. NASDAQ 100 futures down 15. S&P down 4. So very quiet here. We're seeing the currencies. We're seeing the euro down about 0.5%. So euro's down quite a bit here at 107.50. What's that all about? Well, not sure. It could be related to the EU parliamentary elections. It looks like Europe is shifting to the right, which is a good thing in my opinion. Not that I care much about politics, but there's the feeling that Europe is going to have to move away from this green agenda because, yeah, there's a lot of opposition to it. People are waking up to the fact that it's a bankster's scam, really, to take more and more tribute from you, to tell you that the climate is changing and the world is going to be destroyed and you have to pay taxes and you have to do what they tell you, right? And yeah, that's a good thing in my opinion, that this is being exposed. The pound is pretty steady. It's down slightly. The dollar's up 0.25% versus the yen at 157.18. What about the commodities? Well, we got WTI crude pretty much unchanged, trading at 75.42, and Brent as well, up slightly at 79.60. High-grade copper, that's up 0.2% at 4.49. What about the bond market? Where are treasury yields this morning? Well, the 10-year yield is up another 3.5 basis points. It's approaching 4.50. It's at 4.47. And yes, on Friday, bond yields spiked quite a bit. I think about 13 basis points. So it looks like we could go back up. Yeah, we went down to around 4.3. Which was a really important level a few years ago that we broke above. So there you go. We could see some liquidity problems, but as I said, they're not going to let it get too bad. And again, they're going to inflate the system, in my opinion. So there you go. With that, I'm going to wish you all a very good day. Take care. Bye.